Well, thank you for joining us here on a Friday morning. I'm Marlon Bowling with you on the final trading day of April. It is now upon us, and we're going to be putting a bow on this month of activity here at the end of today's session. Here to help us take a look at what to expect in our grain markets today, we have Rich Nelson on the line of Allendale Incorporated. Of course, Allendale is based in McHenry, Illinois, and Rich, I expect it's going to get pretty chilly up where you are here heading into the weekend.
No doubt. We've got a little coolness lined up here, and, of course, some good rain still in front of us. So from us, our standpoint up in the northern portion of Illinois, we won't be doing too much activity as far as the next few days, but certainly we look forward to a little warm-up here into next week here.
Well, of course, a lot of talk about the weather and its impact here on the grain production in the U.S. Lots of heavy rain expected in the central and eastern Corn Belt by the time we get into early next week. And lots of heavy rain, for example, in the Missouri, Arkansas area. And in some areas, they're talking really cold weather, maybe even potential for a little bit of snow in the high plains, the southern high plains even, and freezing temperatures that could really threaten that wheat crop out there, which is already headed. Kansas probably is at least a third headed, I would think, by now, because it was fourth planted last week already.
That's exactly right here. So we do have some mild concerns right now, and for the trades focus, we probably aren't going to see any major problem as far as the cold snap this weekend. But the market really usually likes to address these issues with a small little premium. Interesting to point out, like you mentioned, we don't really have much of a big premium going on into this little cold snap in front of us. So that's something that we'll have to watch as far as today's discussion. Regarding corn planting, keep in mind for this coming Monday's planting pace, usually we're about 34% complete. This time we might be maybe in that 27 to 34% range. So we'll see if that makes too much of a difference. But one bearish impact we've got to discuss here today is the maybe larger than expected deliveries for first notice day for these May contracts on pretty much all these grains, in fact.
Yeah, that starts today. So what kind of deliveries are we looking at here?
As far as corn, they came in at up to 1,100 contracts. They're only talking maybe 0 to 600. Soybeans, 1,115. In fact, I should say 1,015. So 1,015 contracts. That's over the 200 to 500 they're expecting. A little more from meal and oil as well. And wrapping up on the wheat side, these are the ones which actually came within the trade's expectation, just lower 400 contracts. And that's not going to give too much of a discussion for us on the wheat. But corn and beans, a little more numbers lined up. So maybe a slight amount of pressure for today's trade.
Explain to our viewers what that means when you have heavy deliveries like that.
So in terms of deliveries, we're simply comparing the price of futures versus the price of cash, the actual physical product here. And when futures do have perhaps maybe a little higher price than what people feel is warranted, you can see these heavy deliveries. So you can take delivery of grain actually through the futures contract itself, or in addition to buying at your local elevator. But in this case, market is simply saying perhaps these grains are maybe a little higher price compared with cash, especially with many producers moving out some bins here before planting.
Thanks for spelling that out. I appreciate that. And let's take a look at how our overnight trade shaped up on the corn and soybeans and wheat markets here. On the corn market, just a touch of weakness here, and now it's starting to, as we got toward the end of the Globex session, we were down 2.5 at 359.5. So it was on the lower end of the trading range overnight. On the soybean trade, we have the May contract down just a half cent overnight at 9.45 1/4. On the wheat market in Chicago, we had the May 3.5 higher again at 4.17. Rich, I'll bring you back here in a moment, and we'll talk a little livestock market action, which was in orbit yesterday. It was in its own little world, and we'll explain that when we come back. Well, we're back in our conversation here with Rich Nelson of Allendale Incorporated, and lots to talk about when it comes to the livestock trade here today on the heels of that performance that we had yesterday. All right, you have to admit, yesterday we had the April feeder cattle going off the board. Today we have the April live cattle going off the board. But other than the April contracts, all the contracts on live cattle and feeder cattle ended up the day limit up yesterday, and I would assume that means we're in expanded limit mode here today on both of those contracts or both of those commodities, right?
Right. In fact, so you're looking at 450 for the limit on these live cattle right now. Over on the feeders, which have a normal 450 potential move each day on the limit side, now that's expanded to 675. So we do have the potential to do some exciting stuff as far as today's market starting out point here.
Now that would be expanded limits, but that also means expanded margins too, doesn't it?
That definitely is something we got to look at here, and especially wrapping up towards the end of this month. This is a big issue as well. You know, getting a lot of these people squeezed here before end of the month, and especially in this past year and a half or year to two, we've been clamped down so much by these regulators that people just do not allow these type of margin situations to be sitting with for a long time now. So, end of the month, you've got to get these positions cleaned up. Is the bottom line.
All right, let's take a look at our livestock summary from yesterday, and we did have a cash cattle trade that did develop, and from what I understand, it was a really active trade too out in the plains, and this is what we ended up with. We had a price range on the cash cattle trade of 134 to 138 for a top yesterday. That would have been about $6 to $8 higher. Dress basis sales, 210 to as much as 219 yesterday, and that was anywhere from $6 to $12 higher. I don't know if anybody saw that market coming, did they, Rich?
Definitely not as far as yesterday's discussion. No, we definitely have a market which is still in the controlled bulls right now. A lot of fund interest, and also there is some valid, certainly some valid fundamental moves behind this, and the very tight feedlot situation, which probably won't be completely cleaned up for another 2 or 3 weeks for the extra next batch of new summer cattle hitting the market. So in the short term, this is still a bull market here.
Now, on the lean hog trade yesterday, we had it trying to follow the cattle market higher. Was it just riding on the coattails of cattle, or was it trading higher on its own fundamentals?
I think hogs do have a good fundamental picture here for these next few weeks. Number one, we kind of removed that NAFTA concern regarding the 2 days ago discussion. So we took that off the bat, and that's great to see as far as the allowing this market a little upside. At the same time, we have the seasonal turn. For instance, in the past 2 days, cash hogs have been up $1 each of these days. We bottomed the cash hog market back on last Thursday. So we do have the seasonal turn for hogs happening now at the exact same time as we got this cattle market. And also, let's look at the NAFTA discussion, which is now off the table. So 3 things helping us out on the hog side.
Pork carcass cutout values yesterday afternoon from USDA are reported to be about 18 cents higher at 73.65. Most of the primal cuts were just a touch firmer yesterday. The belly market only moved about 18 cents to the plus side. Rich, thanks for your expertise as we get ready to open up the trade here on the final trading day of April. Good to visit with you again. We'll be talking to you again soon, I'm sure.
All right. Sounds great. Thank you.
Thank you, Rich. Rich Nelson of Allendale Incorporated. And they're based in McHenry, Illinois. Always good to get their input into the markets here. And we're about ready to get off and running here in about 7 minutes.
Yeah, a lot of anticipation building for today. Last day of the week, last day of the month for trade.
Lots going on.
Lots going on. Well, actually, Monday's the 1st.